And then I just need Instagram. And we'll go live. One sec, folks. There we are. All right, folks, what is going on? It's another week, another What the F happened. So it's kind of interesting. We are right now in Indianapolis at a conference. So as you can see, I'm on this side of the table, and Stephen is on that side.
Really mess with you guys here. Here we go.
So we're doing something a little different, a little fun, but there's a lot to talk about. We're going to do a condensed version today just because we're out of town. So we're going to go 30 minutes, and we're going to hit heavy on the Fed's decision that's going to happen today. And what does that mean for markets? What does that mean for you? We're also going to talk a little bit about the second assassination attempt, and we're going to talk about the markets as a whole. So sit back, get ready, because we're going to rant, we're going to rave, we're going to argue about what's going on in the world. See you in a second. All right, we are back at it. What is going on, everybody? This is another week, another episode of What the F Happened, and we're going live from Indianapolis out here right now at the Westin. Beautiful place, as you can see from behind us. Not a bad hotel. So we just got wrapped up. Day one was yesterday. Today is the start of day two, but we can't miss what the F happened. So we're down here in the lobby going live. And, thanks everybody for joining. I see we got a whole bunch of people coming on right now. We got Instagram going live. But let's just start off with the 800-pound gorilla in the room, and that is the Fed. So there's been so much anticipation, so much pressure on the Fed, all in an election year, to drop the rates. Now, I think you all know this isn't like insider information. The Fed's going to drop rates today. They're going to drop rates about 0.25%. That would be my estimate, and I think that's probably spot on. But what is that going to mean for you? What is that going to mean for the markets? Well, here's my opinion, and it is simply my opinion, is this rate cut that they're going to do is already built into the pricing in the market. So if any of you stock goers or people that are invested in the stock market think that this rate cut's going to boost your stock portfolio, it already did. The markets are super efficient. They build things like this in, and there's been a lot of anticipation for this rate cut. And now they're going to get it today, but that doesn't mean the markets are I don't think, going to be affected tremendously. We might see a big pop today, but that'll just be kind of a rah-rah and then back to normal. And that's because it's already built into the pricing. Matter of fact, if any of you have been following what we talk about with Treasury bonds, it's already built into the price of them, because Treasury bonds did what? Went up in price. Why? Because anticipation of rates going down. So as Stephen's putting this right here, Treasury yields rise as investors look to the Fed rate decision. So there's lots of information out there, a lot of B-roll that we can kind of pull up showing you what's going to happen when rates go down. Now, here's the thing I want to make sure all of you understand. It's an election year. So it's a bit wonky, a bit crazy. Stephen, give your take on what an election year is for the markets.
Yeah, I mean, historically speaking, there's always big changes. It seems like they try and, keep things kind of stable, keep things halfway looking normal for the election and the purposes of, whatever way you want to look at it. But right now, that's kind of where we are. You see the markets, we've had some volatility, but they've stayed strong, they stayed high. How long that lasts, nobody knows. And that's where we're at right now. And most people believe that sometime coming up to November, whether it's before, whether it's right after, whether it's beginning of 2025, we're going to start seeing some changes. And so right now it's all about being positioned properly. You see people like Warren Buffett, obviously cashing out, stockpiling cash, selling at, all-time highs. And there's lessons to be learned from that. So, where are you right now? Where's your money? Are you approaching retirement? Can you ride this out? I have friends that are my age that are like, you know what? If the markets go down, I'm good with that. I'm going to continue to dollar cost average, buy in each month. And, if things come down, I'll just buy stuff cheaper. And then, later down the road, they'll rise up. And over time, historically, that's always happened. But maybe you're a little bit closer to retirement age. Maybe you're saying, hey, in the next couple of years, I'd love to be able to retire. I'm expecting this in my 401k, my retirement accounts. Can I, but what if the markets do drop 10%, 20% more? Will I be okay? Do I have time to wait for it to come back up or not? And that's kind of where we are today. So that's why we talk a lot about, Chris, things like treasury bonds, like where can we move our money? We talk a lot about various alternative investments like real estate, being able to control money. Maybe those are short-term loans. Things of that nature. So what can we do right now? Or just like Warren Buffett's doing, nothing wrong with stockpiling cash, especially if you warehouse your wealth like we do, and especially design whole life policies where that money, even while it's just sitting in there, it's always compounding, guaranteed to grow no matter what the markets do. So regardless of what happens with this election coming up in November, regardless of what happens with the markets, we're protected. We have our money in the right places. That's what we're sharing, exactly what to be able to do also.
Now, I have a thing or two to say about, kind of what your friends are saying with, well, I'm just going to ride it out. Now, I've been in this game a little while, and what I can tell you is a lot of people have no idea what a recession is going to mean because they're young. I mean, if you're under 38 years old, you've never really felt the impact of a recession. You've been through recessions, but you've never felt the true impact, but you're about to. So when I hear that from folks, and I hear it a lot, well, over the long haul, the markets are going to do this, and they're absolutely correct. But here's the one thing that everybody's missing. And some folks on here, from Lisa and anybody that's a little bit older, you all can relate to this. It's called human emotion. I don't care what you think or what you think about the markets. When your portfolio drops 20%, 30%, 40%, you are going to freak out. I don't care how young you are, you're going to freak out. Emotions are going to come into play. You're going to make emotionally based decisions. You will sell low. Mark my words. You might continue the dollar cost averaging, but you'll get so scared with the money you have in the market because you're like, when's it going to end? Oh my God, it's never going to end. I got to get out. And you'll sell and you'll lose money. It happens every time. So I don't care what people think. I don't care what their outcome, in their mind is going to be with, oh, it's going to be fine over the long haul. One thing is certain, human emotion always triumphs. And when you take that to another level and you talk, like Stephen was talking about Warren Buffett, like Warren Buffett in Berkshire Hathaway has more money than any of us will probably ever fathom to have. And I say that loosely because, hey, I think some of us are going to have lots of money, but he is selling stock of super strong companies. Bank of America, whether you agree that they're strong or not, but financially they are. Apple, I think you can all understand that Apple's fundamentally sound, but he's selling them. So if he's the long-term investor, he's the long hold guy, then why is he dumping some of his prized stocks? What does he know that you don't know, and why are you not listening? And here's all he knows. It's so simple. Buy low, sell high, and don't lose money. Now, Warren Buffett's got a lot of investors in Berkshire, and he's protecting them. He's doing what his job is. He's protecting the downside. Now, he's staying invested, and some would say, oh, he's still got a lot invested. Yeah, but he sold a giant amount, and he's sitting on tons of cash. And I would suggest all of you take some real hard looks in the mirror and start thinking, hey, if Warren's doing it, maybe I should. And because he understands human emotion, and he understands his investors don't want to see big drops. And when they do, what Warren's going to come back and answer with is the same thing you should prepare to answer with, and that is a bunch of cash on the sidelines to buy low. And that will never get old. And dollar cost averaging and riding it out for the long haul isn't going to give you the same feeling or the same impact. It's just selling high, wait for the, listen, let's say it's the same exact stock. You sell a stock today, you take your gains off the table, you sit on the sidelines. a year from now, we're deep into a recession after this election, and all of a sudden now you can buy that same stock 30% off. How many of you want to walk into the car dealership and buy any car 30% off? How about 40% off? Hell, while we're at it, why not 50% off? Would you feel really good about that purchase? You would, because just a year ago you would have paid 30% more, 40% more, 50% more. So like, this is the human emotion side. Don't ride the roller coaster. Don't play the game. You'll lose every time. I don't care how much you think you can weather the storm, and I'm not saying you can't, but you're not going to want to. Take the high road. Follow Warren Buffett's teachings. He said the same thing for, gosh, as long as he's been in Wall Street. Buy low and sell freaking high. And that way you don't lose money. The Fed's decision to drop rates a quarter point is just the start. But if you all think that the Fed's going to come in and swoop rates all the way down to where they were during the pandemic or in the fantasy world that we've been living in, since, my gosh, 2009, this low interest rate environment, you're probably wrong. They are not going to pull rates down that heavily. I believe we're going to stay at this heightened interest rate environment that we're in for the next couple of years, even if we enter a recession. If we enter a recession, the Fed will pull rates further, but they won't probably drop them to those historic lows that we saw in the prior. So a lot of people, I think once the Fed starts dropping, they start thinking, oh my gosh, well, I'll just wait it out and rates will be, 2% or 3%. I'll be able to get a mortgage. I doubt that. I'm not saying it can't happen. That'd take a real serious recession for them to do that. And I'm definitely not telling you that we couldn't see a real serious recession. All the signs are pointing to this is going to be a doozy. But if you want, hey, listen, some folks just watch the news and they listen to Yellen and they believe everything that they see on CNN. I don't even know where to stop with that one. But, Yellen saying, oh, we're going to soft land this. It's going to be fine. We have nothing to worry about. Bullshit. Stephen, what's your take on the news?
Well, yeah, I mean, if you think about where we are, what are rates right now? What is the 5-6%, 5.25? I mean, so historically speaking, that's not even high. So think about where we are right now when we're being forced to cut rates from 5.25-ish down just to be able to keep things right now going in the economy and prevent this recession from hitting really hard. And so, they're kind of getting back into this rock and a hard place where if they drop rates too much, we're going to get back where we were with inflation and everything and overheating the economy. But if they don't drop them, we're going to be in this recession territory. So we're in this tough position right now. And it's just, we're in this standstill. And, you see people over here like Steve. And what kind of business are you in, Steve? I forget, but he's saying in June, July, and August, they've been seeing a slowdown in people using their financing is up 80%. So it's pretty crazy. And, Jay was asking, Jay Tenenbaum down in Texas, what does the rate cut do to insurance company paying interest for charging loan rates? And that's a great question, Jay. And to answer that question for you, one of the interesting things is, remember when we have these whole life policies, we use mutually owned insurance companies. And so we share in the profits of these companies. And so a lot of times, people talk a lot about the loan rate, what are we paying to the loan rate? But if you think about what that loan rate is, we're paying that interest to the insurance companies. That is basically profit for the insurance company. And so a lot of times when we see loan rates go up, we also see dividends increase because it's all hand in hand. And so if we're paying a little bit more, but we're earning a little bit more, it ends up balancing out. And from what I've seen with these policies over time, they do kind of go with that. They go in this motion. And so that's why when we talk about these whole life, we feel like these are guaranteed, right? It's a sense of certainty in a very uncertain world right now. I mean, it's chaos out there. You mentioned Donald Trump over the weekend, second assassination attempt, which we could talk about just in a second. I mean, I was just looking at CNBC.com, not a single mention of the assassination attempt from Sunday. And believe it or not, I watched some of these morning shows, over the last couple of days, and they're almost trying to say like it didn't happen, which is just wild. But again, that's a whole nother situation, and we can talk about that in a second. But back to the whole life policies, it's one of those things, Jay, where it's like, hey, if the loan rate goes up a little bit, I mean, they're going up everywhere. If it comes down, it goes down. It's all good. We have different alternatives if we need them, but it gives us that certainty. It gives us those guarantees, and it allows us then to kind of take a step back and say, okay, what is our strategy moving forward? Can we sit in cash right now and wait? Do we want to get into shorter term investments that we can get our money back, when things do start to change? Do we want to just kind of get into stuff that's nice, safe returns, maybe 7, 8, 9, 10%, which brings me to a very important topic. At 1 p.m. today, join us for Wealth Webinar. We actually have a special guest because Chris and I are both going to be traveling home from this conference. We're at in Indianapolis right now. But what we did is we invited one of our a guy that we've been doing business with for many years, Kevin Shortell. He's one of the best in the country when it comes to note investing. So note investing, just to give you the real basics of it, basically everybody knows real estate. Well, when you buy a home, most homes are purchased with a mortgage. What a mortgage is, it's essentially is a promissory note. So what we have, or what Kevin Shortell does, is he creates notes, he buys notes, basically mortgages, and he has all kinds of different notes. And one of the things you guys have heard us talk about when it comes to real estate investing, why I love real estate investing, is regardless of what the market's doing, what the economy's doing, there's different investment strategies that we can take advantage of no matter what the markets are doing. And there's different types of investments we can make in real estate depending on what the markets are doing. But one of the cool things with note investing is you can buy performing notes, you can buy non-performing notes, you can buy all these different types of notes that correspond with whatever your strategy is in this market today. And so what I've talked to Kevin about this week and what he's going to present today on Wealth Webinar is exactly how to use real estate and note investing in these volatile, uncertain times to fit your investment strategy. So it's going to be a really cool conversation with Kevin today at 1 p.m. Eastern. So make sure you join us for that and start really thinking about where your money is so we can position ourselves properly in this market that we're in right now, Chris.
So just to kind of put a little bow tie on this whole rate thing, I mean, some of the simple things that you can expect. Number one, a lot of folks have literally went from one fantasy world to another where they think their high yield savings accounts are going to continue to pay them. I had somebody at an event literally tell me that her high yield savings account had a guarantee. And I'm like, no, it doesn't. And she says, yeah, it does. They're paying me 5% and it's guaranteed to pay me right around that amount. I said, no, it's not. The second the Fed drops rates, your savings account will go down almost instantaneously. And it will continue to go down as the Fed drops rates. So this world where we can make these decent, we'll call them guaranteed returns in savings accounts and things of that nature, is about to start getting rocked with these drops in Fed rates. So I'm not saying a quarter point is going to make a big difference. I mean, if you're at 5 and you go to 4.75, give or take a basis point or two, it's not a huge deal. But the thing you got to understand is, like, don't take this information. Don't think that this stuff is just going to continue to go, because it's not. You're not going to continue to earn these kind of interest rates on savings accounts and CDs and money market accounts. It's all about to start turning. But the one nice thing, like with what we do with the specially designed whole life, business as usual. Nothing really changes there. Matter of fact, that's not true. Things do change there. First off, your contract, your guaranteed interest in your contract does not change ever, no matter what. It is lock, stock, and barrel. And most of the companies we use are right around 3 to 3.25%. Now, the other thing that I can tell you that's been happening and will probably continue to happen is dividends have been going up every year. But if rates go, some people would think, oh, if rates are going down, why would dividends go up? Because here's the reason why. The insurance companies have been gobbling up these bonds, these treasury bonds at these higher rates, locking the rates in, locking these yields in. And they're also playing the short-term game, which has boosted their profits. You got to remember, insurance companies, more than any other kind of firm or a company out there, they sit on so much money. And they constantly have new money coming in every day to the tune of billions of dollars coming in the door. And when they get that money, they have to make that money go to work, but they can't risk it like a bank does. Okay, they're not risky drivers. They've got guarantees. They've made promises to uphold on 100 years into the future. So they got to make sure that the money they have today is going to be around in 100 years. And all they need to do is just make sure that that money trends inflation. So how do they do that? Very low risk, safe investments. So those low risk, safe investments right now, and in for these insurance companies into the future, for the better part of the next 30 years, are locked in. which means you now have a tailwind that we have not seen in over 30 years in the insurance industry of a rising interest rate cycle. And they're locking these rates in. As they went up, they just kept buying more and more bonds, and they continue to do this. But just because rates go down, yes, your savings account will go down. Yes, your money market will go down, but the insurance companies will not. They're likely going to see increases in dividends. I don't know how far into the future, but definitely into the near future, you're going to see increases. That's speculation, but that is a pretty good guess. So that's what the world is we live in. Now, the only variable in there is the loan interest rates on the loans that we use from these policies are tied to the bond index. Now, that bond index has been volatile and will continue to be volatile. So these insurance companies, I mean, a lot of them right now are increasing, but the increase on those rates are taking them from like 4.9 to 5.2. I mean, come on. It's a couple basis points. It's not going to change much in your life. You can't borrow from a bank anywhere close to that. But we do have one insurance company that did just do a pretty big increase, which is going to kind of rattle some things, but I think it's a temporary thing. I think they're just kind of testing the waters in this weird environment that we're in, this politically driven environment that we're in. So that's kind of what you can expect. So I just wanted to cover that because I saw there was some questions. And like Steve said, the orange man, it's his fault for everything. But it's kind of interesting. And folks, I don't know the fact checking on this, but I saw photos. So a picture's worth 1,000 words, or maybe 10,000 words in this. The two, would have been assassins, the two failed assassins that tried to take Trump out. Did you realize that both of them were featured in commercials for BlackRock? If you don't know what BlackRock is, they're a fund, a hedge fund that pretty much owns everything. Between Vanguard and BlackRock, I don't know what they don't own or have a very leading stake in. And these two individuals, facts be told, and look at it. If you know something I don't, please tell me in the comments. These two individuals were both in BlackRock commercials. Kind of just makes you think, right? Who's the puppeteer behind the curtain? Who's the one pulling the strings here? Well, we already know who that is. All of you should know who that is, but yet the sheeple are out there and they just can't see this. They go about their merry little way and everything's Trump's fault. Now, listen, am I saying Trump's the greatest, ever and the best person that the Republicans could have put forth? No, matter of fact, I've always liked Trump. So I'll just tell you that. But here's the fact of the matter. I think if the Republicans had put somebody else in, they would have already won. It would be a clean sweep. Kamala wouldn't even have a chance. But there's so much hatred, and it is fake hatred. It is hatred created by the media that has created this environment where literally, it is a close race. And it shouldn't be at all, but it is. Because Kamala has nothing in her background that says anything about how she could ever be a good president. Ever. I did a video on YouTube talking about her policies. And if you watch that video, yes, maybe I'm kind of beating it up a little bit. How could you not? Any of you want higher taxes? The answer would be no. I don't need you to answer in the comments. You don't want higher taxes. But if you vote for Kamala, you're going to get higher taxes no matter what. It's in her policy. And here's the thing. Somebody the other day, because they watched the video and they sent a mean comment on there and they said, yeah, but the unrealized capital gains, not that she'd ever get that through, but the unrealized capital gains are only for 100 million. No, I felt like bitch slapping this person because they simply have never looked at anything in history to understand how this works. Yes, it might start at 100 million. That's where it is. But you know who that 100 million is? It's all her friends, all her donors, all her, whatever you want to call them. Okay. And then what happens is over the 4 years, that 100 million becomes 50 million. Then it becomes 2 million. Then it becomes 500,000. And then all of us are paying tax on unrealized gains. If you don't think that's the way it works, then clearly you don't know a freaking thing. I almost said it. A freaking thing about history. It has always been that. So when I look at her policy, I look at the different policies she has laid out in the public. And I got to say, who the fuck would vote for that? Stephen, what's your take on it?
No, it's just, it's, I mean, you don't want to think the worst when it comes to, people and humanity and the United States of America. But, these two assassination attempts now, and just kind of some of the strange little details behind them, like you mentioned with the BlackRock commercials, people that you wouldn't expect to be these assassination type people that, what drove them to this, who gave them the training, who showed them how to do this stuff. Like, this last guy down in West Palm Beach, which shout out to my hometown sheriff's department. They're the ones who actually caught the guy on I-95 trying to get away. And it was kind of cool. I saw Trump invited all the sheriffs that were involved with the arrest to Mar-a-Lago yesterday and had him out there and had lunch with them and honored them and took photos with them. And so that was kind of cool to see. But the other thing I'm happy this happened in Florida because, in my opinion, we have the best governor in the United States of America, Governor DeSantis, and everything he's done over the last several years, what he did during COVID, one of the most free states in the country, and, really fought against some of these mandatory vaccinations and things of that nature. DeSantis has really shown himself to be a champion of free speech in the country. And so I say I'm happy because he's already coming out saying, listen, the same people we're expecting to investigate this assassination attempt are the same people that are going after Trump in all these lawsuits and the Justice Department, everything. And DeSantis has come out and said, listen, we're going to do our own investigation. There's a lot of state laws that were also violated. So we have jurisdiction here. And DeSantis is not giving up this guy. He's keeping him. And he's saying, we're going to do our own investigation. We're going to get to the bottom of this. We're going to find out because the facts don't add up. This guy had no connection to West Palm Beach. It was a last-minute golf trip that they decided on. Now, Trump does golf at his golf courses quite frequently, but it was a last-minute decision to have this golf outing on this day. They say that this assassin was posted up for 12 hours in the bushes, hidden, just waiting for Trump to come. He was one hole away. Thank God for the Secret Service. And they spotted him with the drone and they were able to take some shots at him and get him out of there. And it made him flee and everything like that. And Trump was safe. But it's like, how did he know that Trump was going to be there that day at that time? Not many people knew. A very small amount of people knew. So, we'll see if we do get some actual, facts and what comes out, because the first assassination attempt, nothing adds up, but we're not getting the real story. And so we'll see what happens with this one, what plays out with that. I don't know if I want to know, but at the end of the day, truth will set you free. So we'll see what comes out with it. Wild stuff, though. And I don't think it's going to be the last one, unfortunately. I think we're going to see in the next 50 days, what is it, 50 days till Election Day now, 49 days till Election Day. I think we're going to see more nefarious stuff coming out. So be prepared for it. Be prepared.
Well, one last thing, too, on Harris's policies, that I called out in that YouTube video. And if you folks haven't seen the YouTube video, go to my YouTube channel at the Chris Naugle, subscribe first. Thank you. And then watch that video. I literally lay out all of her policy and I give my opinion on them. Now, my opinion may differ than yours, but it's very difficult for my opinion to differ from yours on the majority of her policies because it's pretty black and white. And it's very black and white when it comes to taxing. And one of the things I can tell you for certain, okay, is if she came in, she's going to increase the corporate tax rate. Roughly, it's an increase of, I think, what did I figure it out to be? About a 30% increase. Do you know what that's going to do, folks? Do you have any idea what that'll do? That will drive business out of the U.S. You see, here's how I know that. I know that because it's happened already. When Trump was in office, he did his very best to bring companies back to the U.S. And he was successful in doing that with tax cuts too, as they would say, tax cuts for the rich. Tax cuts for the rich and tax cuts for corporations, as most people on that side would say, oh, they're just the greedy folks. What that means is they bring their businesses back to the U.S., which means it creates more jobs for U.S. citizens, high-paying jobs for that matter. And when that happened, that's when our economy started going up, up, and up. Now, all of a sudden, you're going to tax the rich or the corporations, as her policy clearly lays out. What you're literally going to see and what you're going to do is you're going to see business again move overseas. You're going to see business move down to Mexico. It has happened in the past. It's going to happen again. Mark my words. There is no way it cannot happen because it has been proven by history that will be the move. And again, I just don't know why anyone would want to vote that in. Oh, but the orange guy is a felon. Fucking learn the law. Go in and look at his convictions and what they pinned on him, okay, with those felonies. Just look at them. It's like you jaywalking. It's like you walking your dog and your dog shits in the park and you didn't clean it up. It's like you tripped and fell and you didn't. I'm making stuff up, but they're so ridiculous in nature. But they just take it and they put it up on a pedestal and they make it what it is. It's just the media, folks. It's just the media. Now, listen, I don't care who you vote for, but if you're going to vote for Harris, please tell me why. And don't tell me your reason for voting for Harris is because you hate Trump. But that is 90+% of the time what people say. Oh, I'm voting for Harris because I don't like Trump, or because Trump's a felon, or because this or that with Trump. No. You failed to listen to my stupid question. Why are you voting for Harris? Not why you're not voting for Trump. We already know you don't like Trump because everybody hates Trump, on that side, because the media's told you to hate Trump. Because you loved Trump before that. Oprah loved Trump. Okay? All of them loved Trump. And then all of a sudden, now they hate him. Excuse me. So it's pretty interesting to watch that. And it's not hard to see. And there's plenty of video footage where Trump's on all of these news stations. Trump's literally laughing with all the people that now what would be the word? Condone them? No, not condone. Whatever. That all just, say they hate him. They loved him before and now they hate him. What changed? The media told them to hate them. That's all it is. It's going to be an interesting ride the rest of this year. But the one thing that you absolutely can see coming is there's going to be a drastic slowdown in the economy. It's already happening, and there will be a fallout. The only reason it doesn't feel like it right now is, well, people have jobs still. That's going away a little bit. But not only that, they have credit cards. Credit cards, the balance on credit cards is up so significantly, the number would scare you. And now, just recently, I covered this in a YouTube video, those delinquencies on those exact credit cards that got racked up are now up 40% and climbing. Delinquencies turn into defaults. And should I tell you where the rest goes? I think you already know, but let's flip off of politics. Let's flip off of the Fed decision, and let's go to other breaking news. And this is kind of sad. I'm a little older, so maybe this hits me a little harder, but Tupperware. You all know Tupperware. Maybe some of you had parents, your mom more specifically, who were Tupperware salespeople, right? They would go around and do Tupperware parties. Anyone remember that? Yeah. Tupperware filed for bankruptcy today. It's a pretty sad day. The company that we, most of us grew up with, the company that we remember our parents or our mother selling the goods to, their neighbors and doing those little Tupperware parties with wine, always had wine, is now bankrupt. So what does this have to do with you? Absolutely nothing. I just figured I would change the tone and talk a little bit about Tupperware filing Chapter 11. Now, that just is a reorganization. So maybe Tupperware doesn't go anywhere. Maybe they get their shit in order, reorganize, and come back. But it's just a sad day when that company files for bankruptcy. But this won't be the only company. There's going to be a lot of banks that go insolvent in the next coming year. There's going to be a lot of other companies that run into trouble. There's going to be a lot of tech companies that really, we're going to find out, had no real reason to be valued where they were in the first place. AI is around for good. It's not going anywhere. But the valuations that they're putting on companies that are going after AI are whack. They're just like companies before the dot-com crash. And if you follow history, you know what happened next. A really long and painful recession. So with that being said, folks, I don't want to take any more time because we are out of town, but we covered the main bullet points. I'm going to pass it over to Stephen just to kind of close this down and maybe hit one or two other topics.
Yeah, I mean, the Fed rate decision's at 2 p.m. Eastern today, so we'll keep an eye on that and see what they decide to do, quarter point, half point. Like Chris said, at the end of the day, it's kind of already built into the cake, and I don't think it's going to affect much one way or the other. Bigger picture is what's going to happen leading up in the next month and a half, leading into this election, and then what do we see happening going into 2025? And most people agree it's going to be volatile, wild times, and I think it's going to be a wild ride over the next 49, 50 days until election day. So stay safe out there. Stay protected, stay listening to us. We're going to bring you the news. We'll bring you what's actually going on out there, not just what the headlines say. Because again, 2 assassination attempts on a former president, leading candidate to be president again this year for the Republican Party. Never in history have we had 2 assassination attempts like this before. I just opened up 3 different news sites. It's nowhere to be seen. So we clearly see what the media, we clearly see what they want to happen. Full steam ahead for Kamala Harris presidency. Why? You tell me. Better question is, what are you going to do about it? Get out there, vote what you feel like is the right thing to do. Like Chris said, just if you're going to vote, know why. Why are you voting? What's that look like for you? But I encourage you to vote by all means. Absolutely. With that being said, Chris, I think that's about it for today, my friend. It's been fun. We had a great time out here in Indy. We got HELOC Joe with us. What's up, Joe? We got the rest of the gang up in the meeting right now. So we're all headed home later today. And hopefully everyone's having a great week.
Awesome. Well, thanks for closing that down, folks. Don't forget to join us at 1 p.m. Eastern with Kevin Shortell talking about notes and lots of other good stuff. And with that being said, keep pushing, folks. Stay true to yourself. Read between the lines. Read the facts and make your decisions. With that being said, we will see you on the next What the F Happened, or maybe Wealth webinar, or maybe Ask Me Anything. Hell, we'll see you somewhere.